All right, so a lot of people have been asking me lately, how do I know when a trend is about to reverse? How do I know when a trend is about to reverse? Now, there are different ways you know when a trend is giving you signs of reversals. There are different ways, I think about 3 to 4 ways, and I'm going to be telling you most of them here. There are different ways. First of all, the basic retail concept we know, reversal chart patterns. When you talk about reversal chart patterns, you talk about the M pattern, the W pattern, triple top, head and shoulder. Now, all those things are potential reversal chart patterns. But then when you step up your trading game a little, you then get to start reading about break of market structures. Like on the normal uptrend, you know, let me clear my chart first of all. On the normal uptrend, you know, what you see is a high, low, higher, low, higher, low, higher, low. Now, this is a basic uptrend. Now, this is the basic market structure that everybody knows of an uptrend. Now, how do I know when this uptrend is coming to an end? How do I know when this uptrend now wants to change into a downtrend? Now, the most simplest way you can actually know that, okay, now the uptrend wants to change into a downtrend is when you see that from making higher highs and higher lows, you then see price breaks and starts doing something like this. Now, on an uptrend, the basic rule of an uptrend is that we only want to see higher highs and higher lows, higher high, higher low, and then we do not want to see the previous low being broken. This is the rule of the uptrend structure. But then when on an uptrend, we then see that previous low gets broken or violated. Now, it means that it has broken a rule of the uptrend. So something is wrong somewhere. So whenever I see our uptrend violated, it means now there is a potential for a downtrend. Whenever I see that the basic rule of the uptrend has been violated, which is the previous high not being broken, whenever I see that the previous high of an uptrend has been broken, it means there's a potential for the downtrend. And then this concept now, or what I just explained, is now known as break of market structure. When you see an uptrend structure here gets broken at this point now, it is referred to as break of market structure. Now, first of all, you're able to know that, okay, a trend can reverse when you spot break of structures. Now, this does not happen 100% of the time because sometimes it could just be liquidity grabs. But then at least I can tell you it happens maybe 70 to 80% of the time. Whenever you see break of structures, mostly on the higher time frames, they tend to reverse in trends. Now, sometimes also equal highs can also mean reversal patterns. When you see price forming equal highs, let me just admit this guys in the okay, yeah. When you see price forming equal highs, now what it means is that, for example, let's say we're on an uptrend. Now on an uptrend, now we want to make sure that price keeps breaking previous high here. That is, it breaks this high, it goes down, it breaks this high again, it goes up like that. And then it breaks the high and keeps going up. But then when we see price do something like this, when we see price failing to break previous high, we start seeing some rejections like this, like this, like this, like this, like this. It's a potential sign that the trend might reverse. Now, the third one I'm actually going to be talking about is momentum, change in momentum. Sometimes, let me clear my chart. Clear my chart now. Sometimes you could see that we are having markets move or price move with full momentum. Then all of a sudden you see that the momentum starts getting weak. It starts getting weak. You start seeing some funny things. Now, whenever you see this, it means that, okay, now the bulls that we are pushing the market previously are now getting tired. Whenever I see some silly consolidations, most of the time, it means that, okay, now the bulls are now getting tired. And then whenever you are, if actually you are very good with your technical analysis, seeing this consolidation or seeing this decrease in momentum, you might be able to find some patterns that will solidify your whatsoever idea you're having about the market. You might be able to see, okay, maybe a rising wedge that might also signify that, okay, now price is possibly going to change a trend. You understand? So now you can see that, okay, you actually see that the momentum in price at that point is different from what the market has been doing. It's just like whenever, how do I give this example now? Okay, let me say you are running now. You are running. For people like us that are not really good with running, at that point you are starting your race now, the acceleration will be much. But then when you run for like 3, 4, 5 minutes, you begin to get tired and then you begin to slow down. Your momentum begins to slow down. Your speed begins to slow down. That is the same thing with the market. When the market wants to start, you see, poop, it's actually just going up with big candles, big candles, big candles. And then all of a sudden, you see that the market starts getting weak. You start seeing a small big candle, a small green candle, then a bearish candle, a small bullish candle, a bearish candle, a small bullish candle, a bearish candle, then bearish candle, bearish candle, bearish candle, and then the price just falls down like that. So momentums also, the momentum in candlesticks also tells you when price is about to reverse. So let me go to the chart now, and then we will see potential, we'll see where price or trend reversed, and then we will talk about the reason for price reversals. And then one I also forgot to talk about is support and resistance zone. For example, now support and resistance zones, you can use the idea of psychological levels where you use round up numbers, and then the concept behind it is that that is where banks wait to take orders with huge amounts of money to actually move the market. But then personally, I don't make use of psychological levels that much. What I make use of is historical support and resistance level. Now, for example, now you see price. I want to just briefly explain the concept of support and resistance level. Now, assuming you see price moving like this, for example, now, this right here is a resistance level. If we see price do something here like this, it means the resistance has turned support. It has now become a confluence zone. That is what I call a confluence zone. Now, if we actually see maybe price keeps going bullish, 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 and all of a sudden it falls down. Now, at this point here where price actually reversed, becomes our resistance zone. So whenever we see price going on uptrend again, for example, we anticipate that when price gets to that zone, there is a probability that price might fall. So support and resistance zone also can help you identify potential reversal points. Then for people that actually use trend lines, whenever you see maybe price doing basically something like this, no, let me use this rather. Whenever you see price doing something like this, something like this, something like this, now you can easily connect your trend line right here. You can easily connect your trend line. Now, if price tends to go on a minor downtrend, maybe a correction, now, when assuming this is on the higher time frame, maybe the daily time frame, whenever you go down to your H1, you see that this little correction happens to be a massive downtrend of the H1. If the overall of this chart is on the daily, when you go to the H1, you might see that looking at the downtrend, which is just a minor correction of the daily, might be a really, really big move. So on the H1 now, whenever you see the downtrend, and then price gets to your trend line, there is a probability that price will respect your trend line and then go up to continue uptrend. So you've been able to discover or able to realize that, okay, now there was going to be a potential change in trend right here. So I'm going to clear my chart now, and we will go over to real price and see why some trends actually reverse. Now, if you're following me, I will please want you to unmute your mics and let me know you are following me as I take a seat here.
Sure, we are following you.
Yes, sir. Follow you.
All right, amazing. So let's proceed.
Yes, sir.
Now, guys, on the chart here, this is boom 500. You know, some days ago I posted on my status that boom 500 was ready to give us some milk. What I meant was that we are going to make money out of boom 500 in one way or the other. So right now, you can see that at this zone here, price came from an uptrend, uptrend, and then it reached this zone here, and then it fell. Now, let us assume that we do not know why price actually reversed from this zone. So we are actually going to look for the reason why price reversed from this zone right here now. Don't forget, price came from an uptrend, and then reversed at this zone here. So we assume that, okay, right now, or rather, I will assume that I do not know why price reversed at that zone. So let us look for the reason why price reversed at that zone. So let's see. Now we are gradually going into analysis now, and that is amazing. You can still learn from it. So let us check why price reversed from that zone. Okay, so now this is where you actually get to use your time frames. Now, this is where you actually get to use your time frames. Now I am on H4 boom 500. I talked about use of trend lines now. So if we connect our trend line this way, we will see that price approached our trend lines and then it reversed from the trend line here. We'll see that price approached our trend line and then it reversed from the trend line. Now I told you something. On the H4 overall, we are on a downtrend. On the H4 overall, we are trending downwards. But then if you go over to your M15, for example, if you go over to your M15, for example, you would see that we are actually on an uptrend on the M15. Very much possible. So I think I'm having some network issues here, but definitely is going to respond. Are you guys still there? Ah, that's all. Okay. Are you guys still there?
We are with you. Yes, we're here.
All right, amazing. Sorry, I had a network issue here, and I'm still trying to get it back. All right, so I said the overall downtrend on the H4, there's a probability that when we go to the M15, we'll see it as a clear uptrend. So I'm trying not to go to my M15, but the network is really not on our side this evening. But then it's still going to work. It's still going to work. Okay. All right. Now this is the 10 minutes chart. Before price actually reversed, price started to reverse out from here. Let us take that out and then we'll see. Now, before price actually reversed, okay, you can see that now we are on an uptrend on the 10 minutes time frame. We are on uptrend on the 10 minutes time frame before price reversed. But then when you go to your H4, you see that overall it's a downtrend. You see that overall it's a downtrend. So difference in time frame also means a lot. Understanding your time frame, it's paramount. In short, you need to understand your time frame to be able to do this thing comfortably. It's very important to understand time frames. So now it's obvious that the reason why price reversed from this zone over here is because, okay, now we were at a trend line, you could say, and then possibly Possibly now, definitely there is an order block that is a little more advanced for probably some people who are here. Definitely there's an order block. And then if you check also horizontally, that is a resistance point where price reverse from. Let's check on the daily. I'm sure there's definitely a resistance zone where price reverse from. Let us extend our rectangle and see. Extending our rectangle, we'll see that okay, now price has even tested that zone before. You can see it over here. You can see it over. This is 1, this is 2, this is 3, this is 4 here also, and then price are expected it here. So two things now are telling us that okay, assuming this market has not yet sold yet, two things are telling us that there is going to be a possible trend reversal here. The first is the trend line, and the second is the horizontal resistance. For people who use Fibonacci levels, you could also apply your Fibonacci to here. And then you will see that, okay, now, definitely, it was at a zone where we expected price to reverse. Let us check using Fibonacci. Okay. Now, using Fibonacci levels, it's in between, it's actually in between 0.5 and 0.6, almost at 0.6, and it is a good level to look for shorting opportunities. So three things now are telling us that okay, now that place is a possible reversal zone. Now, before you actually trade the reversal, now I wouldn't really advise newbies to trade reversals because to some extent there is a level of skill you need to have acquired before you go around trading reversals. Instead, you move with the trend because the trend is your friend. But then before you trade reversals, you could actually wait for candlestick formation, or you go down to smaller time frames to look for perfect entries. Not really perfect entries, there are no perfect entries, but then to look for better entries that will help reduce your stop loss area. So now if actually went down to the H1 time frame, you will have seen something on the H1 time frame. And what is that thing you will have actually seen was the forming of two highs. Two highs. Now these are the highs here. Basic retail concept will actually tell you that they are double, or it's a double top setup. Yeah, it's a double top, no doubt. But then how do you trade this? Let me clear my chart. My chart is now messy. How do you trade this? If actually you didn't get the entry from here, fine, you will have still gotten the entry. I personally, I got the entry from this zone. I will show you. I got the entry from this place here. Here. That's why I got my entry. Now, what did I do to get this entry? I'm just going to show you what I did. I'm going to explain my analysis here for people who joined the meeting. Now, this is the support level here. On the daily, we already saw that, okay, price was already at the zone where there was going to possibly be a reversal. Now, I needed a break and retest of this support level here, or this zone here. And then also, I saw price forming something here, a channel. Now, this channel is more like a flag. You can call it a flag. You can call it a descending channel, whatever you want to call it. The name doesn't really matter. It's how to trade it that really matters. So now I saw this channel that price was actually forming. And then I knew that, okay, overall, even from the daily, I was looking for a long sell. So I took entries when price came to the resistance here, or immediately price retested right here. My stop loss was just above, and then my take profit was down. I marked them before. I think this was the first, this low over here. So you can actually see what happened here now, guys. So we are almost 30 minutes, and as I said, I don't want this meeting to exceed 30 minutes. So right now I'm going to take questions. If you have any question to ask me, okay, if you have any question to ask me, go ahead and ask. Someone is actually asking for the recorded version. Yes, this class is being recorded, and yeah, it's recorded, right? Yeah, it's actually being recorded. So ask your questions now.
I have a question, sir.
Go on.
Okay, how do you manage your trades? For example, now this particular trade you took, you just showed us your TP1 at around that fourth at a particular level, Sha. Do you take partial profits or do you let the trade run? How do you manage an open position?
Okay, if I actually got your question, well, you asked how I manage my trades.
Yes. Do you
Now,
let the trade run or do you take partial profits along the way?
all right, now trade management is a different it has to be a different class on its own generally, because first it has to do with your psychology and then your personality. Trade management has to do with your psychology and personality, but most times now, if you are scared or possibly you lack confidence in yourself, you can actually take we're running out of time. You can actually take partial profits at some levels. Understand? Sure, it's even good to take partial profit. You can never go broke taking profits. You can never blow your account taking profits, and no profit is too small. Understand? So whenever your trade possibly moves 50%, you can take 50% profit. If it moves 70%, take more profits. It moves to some extent, you break even, you take partial profits. It's safe. It's all dependent on how you want it to be. I can decide to open a trade now and tell myself is either it goes my way or it doesn't go my way, and then I hold it, go and watch movies and play games and even forget I haven't placed a trade. Then come back later to see how it played out. If it's a bit far from my entry, I can then break even and move my stop loss below entry. So trade management, if you know you do not have, definitely most times I advise people that trade smaller accounts to even scalp profits. If you have a 10, 15, $20 account, $100 account that you need to grow, just scalp your profits. Just scalp. No big deal with scalping. You can never eat the whole market. So just scalp your profit and then grow your accounts gradually. When your account has grown to a reasonable size, you can then begin to hold swing trades. I don't know if I actually answered the question, sir.
Yes, thank you very much.
All right. So
boss, I have a question.
Okay, go on, sir.
I have a question too. So on this trade boom 500, so how do you set your support and resistance on this one? So it is one that you take this trade. So that's what I want to know.
Wait, come again. I didn't really get your question.
The place you draw your triangle line, this line. So how you at this top, how do you know that this trade is going to sell at this point? So that's what I want to know, please.
Okay, did you just join this?
I mean, what are the conditions?
Okay, did you join this meeting from the beginning?
No, not at all.
Okay, that is why you're actually asking this question. I will just explain it briefly for learning sake. In case the Zoom meeting goes off, I will send another link ASAP. But then from the daily, or rather from H4, we saw that analyzing from the daily or H4, we had something like this. So price was at the trend line, and the trend line happens to be a sell zone. And then also we drew, and also we were able to draw a zone, and we saw that yes, price has indeed respected it before, so there was a possibility that price will expect it again. Using also our Fibonacci retracement, we saw that price was at a reasonable level where we could consider selling until our confirmations. I don't know if you're clear with that now.
Okay.
All right, so any other question?
Yes, I have a question.
All right,
I also have
Hey, Victoria, are you the one speaking? I can't really hear you.
sorry. Then can I proceed with my own question?
Yeah, go on. Ask your question.
Okay, now with this trend line, because I also have now we have this trend line on the daily.
Okay, wait. I think Jefta is the one speaking. So Jefta, after you ask your question, Victoria will now ask hers. So Jefta, please start again. What was your question again?
Okay, this is my question. Like the market on this daily time frame now, it is in a downtrend, and with the horizontal box, you've also getting the place where the downtrend is starting from this broad point. Now let's assume that when I came into the chart, I at this present point where the market is now, like this present line it is selling. That was where I get to the market. Is it still advisable that I sell from this point based on it's on a downtrend, or I just go on that time frame to confirm if I can still enter it?
Okay, you said if assuming you met the market at the current price it is now, is it advisable you sell, or
Yes,
is that your question?
yes, that's my question.
All right, now I advise traders not to chase a moving train or catch a falling knife. You understand? What you are actually supposed to do or expected to do here is for you to wait for a re-entry. The market will always give you a re-entry, a re-entry. You understand? Now that re-entry could be that okay, right now you can just decide to draw a trend line like this, and then possibly let me delete this now. And then possibly when price actually goes back to this trend line here, and then you see some price reaction here that shows you that the market might sell, you can then go short at that zone. You understand? I don't know if you get my point. Look at where we drew the trend line from the high, then the most recent high it formed, and then we extended the trend line. So it's possible that price now might want to retrace to that trend line and then sell from there. So if price retraces to this zone here, and then we spot some selling pressure here, and our confirmations and criteria are met, we can then go short in the market. So maybe ride it till this zone or even lower. I don't know if you get my point now.
Yes, I got to the point.
Yeah, so always wait for a re-entry in the market. Victoria, please go on with your question. Hello, Victoria, are you there? Well, it's like the network is terrible from your side. Can you type the question? We have less than 4 minutes.
Okay, Wesley Blaze, can you hear me?
Yes, I can, sir.
It's Jeff that's speaking right now. So first of all, I would like to thank you very much for this privilege. Actually, this is my first time. This is my first time of joining your Zoom meeting, and I can't believe I could learn a lot from just a few minutes. You understand? So I really appreciate this. So my question is now, initially you drew a particular support zone that later turned into a resistance zone, which you took your entry from. So the other resistance zone below there, some traders like me, I might be waiting for a breakout and retest. What if I don't see any breakout, or is it advisable to just take trade immediately after a breakout of market?
It's not really advisable. It depends on the momentum you see in the market, and it depends on how you enter. It depends on where you want your stop loss to be also. You understand? Sometimes it's actually better you wait for a retest after the breakout. Sometimes you just go into the market like that, but then you have your stop loss in place. The market might retest with you in the market and then end up to go in your direction.
Okay, yeah, thank you. Thank you very much. And according to this market now, it's most likely that it will retest that point and go back again. So
exactly.
Well, let's just see how it plays. Thank you very much. Thank you.
Yeah. So Victoria asked what time frame I use for my entries. Now I use M30 and H1 for my entries. Now sometimes I don't even wait for candlesticks to form. You know, this is actually a level we have actually reached. Not everybody can do this. There are sometimes whenever the market just reach a zone, I know that this is the last spike that will happen, and then I just sell, and then you see zero drawdown, it goes sweetly in profit. But I'll advise you to use M30 and H1 for your entries. When you've mastered it, you can then go down to M15 for your entries also. You get the point. So, and I think that's the last question we'll be taking now. It's 10 p.m. already as promised. I promised to just hold this class for 30 minutes. So I thank you all for attending the Zoom meeting. I hope you actually learned a lot. Now, send me what you learned on WhatsApp. I want to see your testimony about this Zoom meeting. Tell me what you learned on WhatsApp. Tell me how you see it. You understand? I would really, really appreciate it. Please come to my DM and tell me what you learned from this Zoom meeting and how it has added value to it. Thank you for your time. It was really a privilege to tutor you and teach you some of the things that I've learned in the market. It's still your trader Wesley speaking, and I'm signing out.
Right.